Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest stock market trends, also help you understand which are the sectors and the stocks that are buzzing in action and what should be your strategy on all of those stocks as well. We'll also be welcoming a guest on the show to help us really understand the key strategies for all the investors in today's trading session and what's the market outlook according to him. But let's quickly find out how the markets are trading at this point in time. Well, it's a kind of a down day for the markets. We opened subdued and we've been seeing that the markets are inching downwards, 329 points of a cut on the sensex, 61,419. Also, when you talk about the Nifty right here, 98 points down for that one, 0.5% down take, and 18,245 odd kind of levels can be seen for the Nifty 50 in today's trading session. Also talk about the other major indices like the Nifty Bank, that's also down in trade today, about 0.3% odd in trade, although tad bit better than the benchmark indices. Among the Nifty Bank constituents, you have the PSU banks that are only outliers in the market today, over percent gains. So that's the kind of move that you're seeing on PSU banks. Only those are stocks that are really shining bright in trade today. Private banks, on the other hand, are down in trade, financial services down in trade, and in fact, all of the other sectoral indices are actually trading in the red as we speak. So where is the pressure really coming in from? It's coming from the auto pack. That's dragging the street. 1% downtick for this one, 0.5% downtick for even the pharma stocks, and the IT stocks are also down by 0.5%. FMCG stocks are down by 0.5%. So the defensives are not contributing in today's trading session. Royalty stocks continue to be under pressure, 0.8% of a downtick for that one as well. Even among the advanced decline ratio on the Nifty 50, you'll find 44 stocks on the downside, only 6 stocks in the green. Among them, you have Kotak Mahindra Bank, Axis Bank, really shining bright in trade, Tata Motors, HUL, and Divis Laboratories. Those are the kind of stocks that you're actually finding in the green right now. But what's completely dragging the sentiments today are big stocks like Bajaj Finance, that's down in trade, ONGC down in trade, Coal India, Eicher Motors, M&M. So few and far between stocks from various sectors, including autos, oil and gas, and finance as well, that are trading downwards. Let's welcome our guest for today. Mr. Rajesh Palvia joins in from Axis Securities, the expert at technicals and derivatives. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, I remember that, the last week we had been looking at how the markets were building on their momentum, approaching those all-time high levels, even in some days in this week as well. But as we approach the end of this week, we are seeing that the rally may be somehow fizzling out. What are your thoughts on the markets right now? Some more time to keep patience before we see those record levels on the street?
Good afternoon, Sakshi. Yeah, definitely we are going to have new all-time high very soon. But yes, some backstep market has showing right now. We were almost near to 1% away from the all-time high trajectory for Nifty. But on the other hand, Bank Nifty is continuously holding its previous all-time high level as a support now, and we are seeing relatively Bank Nifty showing strength and outperformance compared to the Nifty. But looking at the overall setup, the texture is positive, and one should look at the opportunity to buy in the dips which is coming in the market since last 2 3 trading session. So we feel that till Nifty is holding above 18,100, one should remain on the buying side because it's an important support area as of now for going forward for this November series itself, because again we are going to have a November series expiry next week. And looking at the data setup on the derivative front as well as on the technical, we feel that 18,200, 18,100 are likely to act as a good support area, as a lot of put writers are aggressive at 18,000, 18,100, 200 strike as of now. But looking at the higher side on the call concentration front, 18,400 and 500 are having major call writing base, so which is likely to act as a near-term resistance for the market. But once we able to cross above 18,400, then possibly this rally will extend up to 18,600 to 18,700 also. So our advice would be to buy in the dips. Some cool off effect is happening in the market as we are heading to the November series expiry. So some profit taking is visible in the market. But on the other hand, Bank Nifty is looking relatively strong, and we feel that Bank Nifty can continue furthermore uptrend from the current level also. and we can see a leadership from the banking and financial in the coming trading session also. So we are bullish on the bank nifty, and we are expecting once bank nifty manages to cross above 42,600 650 zone, then this rally can extend up to 43,000, even 43,300 level in the continuation of this uptrend. So for
Sure.
bank nifty, our stop loss is at around 42,000, 41,800. Till bank nifty is holding this level, one should remain on the buying side. Every dip should be used as a buying opportunity.
Okay, so that's as far as the strategy on the street remains as far as the Nifty and the Nifty Bank is concerned. Let's now focus on some of the stocks that are actually showing a lot of strength in an otherwise subdued market. Talk about first stock, TCPL Packaging. That stock has hit a record high today of over 1650. Remember, this stock has already rallied 17-18% this today in today's trading session. It's up about 30-32 odd percent in the last 1 month, and it has been in an uptrend for last few months as well. First up, I'd like to take your view, Mr. Palvia, on TCPL Packaging. How are you looking at the kind of move that we have seen today, and what is the kind of reason why we have seen such a strong surge in today's trading session, and what is the outlook?
So very strong price setup for TCPL packaging. If you look at the overall setup, the stock is in bullish trend since last couple of months, and the stock is forming a series of higher top, higher bottom formation. And now in today's move, stock has given a breakout of its September 2020 to swing high. So with the volume action. So looking at the breakout on the weekly chart as well as on the monthly chart, we feel that this momentum is likely to continue further because it's a very strong breakout we have seen on the weekly chart. Though stock is already 16-17% up in the today's session, so our advice would be if any pull off effect comes in the stock or some retracement comes towards 1600 level, it's a buying opportunity. Now
Okay.
our stop losses for TCPL packaging is at around 1540. Till stock is now enjoying above 1540 level, then next possible target for the stock can be around 1800, even 1850 in the continuation of this uptrend.
Okay, the trend continues. 1800, 1850 levels can also be seen, and this rally could see some more legs to it as well. TCFBL packaging, definitely Q2 earnings were also encouraging, and beyond that, we have been seeing the stock in positive light. And technically, also, just like how Mr. Palvia pointed out, the stock looks to be in a positive zone as well. Apart from this, there's one more stock that is again showing promise, and that is IFB Industries. This stock is also up about 10-11% in today's trading session. Help us with your thoughts on IFB Industries. What are you looking for in the charts right here? Anything that points towards a further upside momentum that investors can chase at this point in time?
So since last couple of months, we have seen stock is consolidating at a lower level, and the formation which we can see on the weekly as well as on the monthly chart, that stock is really looking very attractive because since last 7-8 months, the stock is showing some accumulation activity at the lower end. And looking at the setup, we feel that once the stock manages to cross above 1070 zone, then possibly this rally can extend towards for 1240, even 1300 level in very short period of time. So accumulation activity is done. Looking at the price action of today's trade, especially stock has surged around 11%. Now stock is trading above all its important moving averages on the daily as well as long term time frame. So our advice is to remain on the buying side. On the weekly chart, downsloping trend line breakout is already evident. So looking at the overall setup, we feel that one should remain on the buying side. Keep now
Mhm.
stop loss at 980, and upside target we can expect in the coming trading session towards 1150 to 1200 in the short period of time, and really can extend up to 1300 also in a positional basis.
Okay, okay, understood that. Apart from IFB Industries, one more stock that's on the move on the upside, and that is ESAB India. The stock is up over 6% today, and this stock also has been in momentum for, of course, after the earnings came about. We actually saw in Q2 earnings that the net sales were up 25% odd. Also, when you see the net profit came in at about 32 odd crores for the company, up 35 odd percent on a year-on-year basis. The EBITDA stood up to 32% odd as well. So your thoughts on ESAB India, this stock, how does it look on the technical charts right now?
So since last 7 8 month, stock was in range of around 37 50 to 3200 was the range. But in today's move, now stock managed to give breakout of its last 8 month consolidation range with a decisive price action. So, looking at the breakout, we feel that if now stock continues to hold over 3750 level, which is the breakout level, then possibly next target for ISAB India is around 4,200, 4,300 on the higher side on a positional basis. Though it's not a trading stock, one can buy and accumulate the stock, keep stop loss of 3750, and upside target we are expecting around 4200 to
Okay.
4400 in coming months.
Okay, so it's a long-term stock that you can actually keep on your radar, and there's a strong upside that can actually be seen. 4,200 kind of levels can also be seen over a few months time period. So if this stock definitely interests you, you should keep these targets in mind as well. Apart from this, there's one more stock from the new age tech stocks that is in focus today. We have been seeing this month long so far that all of these stocks have been under pressure and feeling the heat of the pre-IPO lock-in period ending. But PB Fintech is what I'm talking about. That is actually showing some kind of a move on the upside today. There's 6.5 or almost 7% move on the upside. PB Fintech, the parent company of Policy Bazaar and Paisa Bazaar. Mr. Palvia, how does this stock look to you? Is there any indication that this stock can finally start moving towards and inching towards the issue price where it has fallen from almost 50, 60, even 70 odd percent as well?
So, Sakshi, we have seen a lot of pain in the new age companies in recent time, but since last couple of week, we are seeing a lot of buzz in this space. Be it Nika, be it Paytm, be it Policy Bazaar, all these stocks are showing some kind of buzz. But looking at the overall setup, stock is still in the weak zone. But since last 4 5 week, we are seeing that stock is trying to find support at around 380 370 zone, and some bottoming out formation is taking place. But still, we will wait for further more pullback action towards 440 to confirm about the bottom formation. But as of now, if anybody has already bought or if anyone wants to buy at the current level, one should keep a strict stop loss of 370 to a long position. If it's not break below 370 level, then possibly stock may show further more pullback towards 440, which is the major level and the near term basis. If manages to cross above 440, then that really can extend up to 500 520 in coming weeks. So as of now, buy with stop loss of 370 is the advice for PB FinTech.
Okay, understood that. Well, thank you so much, Mr. Palvia, for being with us on this show and sharing with us all the insights on the markets and strategies on these particular stocks that are on the move today. How should investors really approach them? Is it a technical bet or a long-term bet? Where are the cautious points? All of those points will be very important for all our viewers to keep in mind. And here's wishing you a very happy weekend going forward. Hope you have the rest of the day as a good trading day as well. Hope to catch up very soon with you with more technical bets going forward into the next week. Let's now move on to see how the markets are trading at this point in time. Still down in trade, about 300 odd points for the sensex, 61,454. That's the level at which the sensex is trading at. Also 18,255. That's where the nifty is inching towards downwards, 0.5% down, almost 90 odd points of a cut right now, you can see. And it's a broad based sell off that you're actually able to see in today's trading session. It's not just one or two sectors. In fact, all the sectors barring the move on the upside on PSU banks, rest everything is down in trade. 1% odd cut for the autos. That's the big drag factor. Apart from this, it's the realty stocks that are down in trade as well. And also the defensives are not contributing in today's trade. Let's also look at the mid cap and the small cap indices. Both the mid cap and the small cap indices are also down by over 0.5 and 0.6% also in line, and slightly over more underperformance coming in from the broader market space as we speak as well. The India VIX is also down by 0.6%, so 14.7. But just like how Mr. Palvia pointed out, right ahead of the expiry next week, there is some kind of a profit booking that you're actually looking at right when the markets really were approaching those all-time high levels. Investors are pulling off some money right ahead of the a series expiry going forward into the next week. But these stocks, outliers, keep those stocks in your radar. And with that, we'll wrap up this edition. But do stay tuned on to Business Today TV for a whole lot more conversation and insight from the world of business and stock markets. Don't forget to subscribe to this channel and also stay in touch with us through all our social media platforms: Facebook, Twitter, LinkedIn, and Instagram. Many thanks for tuning in. For now.